Hi there, welcome to Kneppy Invest. I did not realize June was so boring when it comes to ASX announcements. I was thinking about this in the past 24 hours in terms of what do I remember in terms of June and what happens on the ASX. And nothing came up. And I went, that could be the reason why so far the first few days of trading in June have been really boring when it comes to announcements. And that has continued today on the 5th of June. I just had a look at some of the announcements being released and nothing. There was absolutely nothing. Now, that's okay. I'm fine with having a boring month when it comes to ASX announcements because July and August, we will see interest ramp up, particularly in August when companies release their results. Not all companies, but many companies will release their results. But because June is so boring, I have a little bit of spare time on my hands this morning. So I thought, why not do another answer and reply video? So let's go all the way back 11 days and look at a comment from, or even a question. Yeah, question from C9226. Thanks, Kneppy. What are your thoughts of hydrogen versus uranium as the next primary source of energy in Australia? Both have different politicians backing each of them. I'll be honest with you. If I had to choose between hydrogen and uranium, I'd definitely go uranium. I haven't really thought about hydrogen all that much. But if I was being completely, absolutely honest with you, we should be heading and moving towards renewable as providing us with 100% of our energy needs. Eventually, it is going to happen. Eventually, we'll have the technology to extract all our energy from nature. That's an absolute. Not sure when that's going to happen. Probably not in the next 10 years. But definitely within 100 years, we will extract all our energy needs from the sun, from wind, from the waves, the oceans. And I think it's definitely needed because uranium, oil, coal, everything else is finite. Energy from the sun is infinite. And with time, we're going to become way more efficient of getting our energy needs from the environment. So that's going to happen. But before that, if I had to choose between hydrogen and uranium, I'll definitely choose uranium. I do think uranium is, to an extent, demonized in Australia unfairly. And that is a bummer because it is a great source of energy. And we should be using uranium a little bit more. We should be having a more of a discussion in regards to uranium. I even work with people who just hate uranium because it's associated with nuclear weapons. That's it. Anyway, so thank you, C9926. I really haven't thought about hydrogen, to be honest with you. And Stuart Percival says there's so many problems with hydrogen. I couldn't say all the problems with hydrogen. It is highly combustible, by the way. Wasn't the Hindenburg the helium? Maybe that's a helium balloon, or was that a hydrogen balloon? I have no idea. Anyway, so many problems with hydrogen. I've never thought about hydrogen. And Ashernomic says what? Okay. KRM says, in regards to the US economy performing quite well, why did Wall Street react badly to that? Says maybe the US markets were down because of reshuffle of stocks after NVIDIA earnings, people selling off to buy into AI or IT stocks. No idea, but there's this weirdness that if the economy is perceived to be doing well, the stock markets will pull back. And the complete reverse, if the economy is seen to be seemingly doing badly, the market might go on a run because the market is right now obsessed with interest rates. And I think I've mentioned this in the past. When I first bought a house in 2010, interest rates were about where they were now. No one cared. No one batted an eyelid at interest rates where they were back then. But we got used to low interest rates, and that is a problem of the central banks lowering the interest rates to the way they were. It was a less of a weapon they had for future recessions because you can't lower interest rates any further than they were, or not much lower. And they needed to eventually raise the interest rates. So at least they do have a little bit of a weapon right now. In case we do go in recession, they can decrease interest rates. But it is not healthy to have interest rates so low for a long period of time. That's my opinion. And let's have a look. Honey Money says, nice content. Thank you. And Jay Chong says, ELF stands for Eyes, Lips, Face. It is Comedic's company. I did have this question about ELF, and this was written 11 days ago, before I did the previous answer reply video, and Jay Chong did ask me about ELF, and I'd had no idea what ELF is. I've never heard of eyes, lips, face. So I'm assuming ELF is ELF Beauty. I'm assuming that. I could be wrong. I think it is. Let's have a look what TradingView says. Doesn't say there. Oh, accessible, clean, vegan, and cruelty-free cosmetics and skincare products. There you go. I'm assuming it is eyes, lips, and face. That does make sense. And the chart looks pretty good, doesn't it? The chart looks pretty good. What about the financials? And the company is currently at a market cap of 10.6 billion. If you look at the annual growth in revenue, beautiful growth in revenue from 282 million up to $1 billion in the last 5 years. Company's profitable, $128 million in the last year, doubled from the previous year. Really nice growth in revenue, growth in profit. Market cap at 10.6 billion. P ratio currently is 88.6. So the market is expecting some pretty good growth for this company. And the chart looks brilliant. That's the daily chart. The weekly chart looks, well, gee, go back to 2022. You could have bought this company at $20. And now it's, what is it, 189.74. This is an absolutely stunning chart, and it does look like the performance of the company is pretty stunning as well. So at this point in time, there's not much negative you can say about ELF Beauty or ELF Beauty, maybe apart from the valuation. But if the company doubles their profits in the next year, that P ratio suddenly becomes less stretched. In fact, if they double their profit in the next few years, their forward-looking P ratio could be quite low for that sort of growth. So I have never heard of this company before, and what I'm going to do is I'm going to put this company onto one of my watch lists. There you go. In fact, I'll put it into 2 watch lists, and one of them is my USA watch list. So there are so many companies on the American markets I've never heard of, and this is one of them. Yet it has a market cap of $10 billion. That's one of the reasons I'm moving and investing more in American markets, because there's so many opportunities over there, significantly more opportunities over there than here. Share price down 3.4% today. So this could be a little bit of a buy the dip opportunity. Seems like the buy the dip opportunity was a few weeks ago. Share price rallied 18% on the 23rd of May. There you go. They must have released their results or something. In fact, let's have a look at that. Let's have a look at, this is just by TradingView, the quarterly data. Revenue up a fair bit, profit down a little bit, but anyway. So thank you a lot. Thank you so much, Jay Chong. One of the reasons I do this channel is to share ideas with you, but sometimes ideas are shared with or to me. And Eyes, Lips, Face is one of those companies, ELF. Jay Chong. Oh, and then a few comments that I've already replied to from Darren. Oh, 3 from Darren. Oh, yeah. And then we get to wondering your thoughts on Magnetite Mines. I've only been looking at the share market for a couple of months. Magnetite Mines. See if I can remember which ticker code this is. It's not MMC. No, it's not MMA. That's Magnetite. Whoops, I can't spell. Oh, that's terrible. Magnetite MGT. Magnetite Mines. Yep, it's MGT. The chart is starting to look interesting for this company. MGT, I'm just going to put it into, I don't know anything about this company. And so if I don't know anything about the company, first thing, this is obviously an exploring company. I'm assuming something here saying it's an exploring company. It may not be. So just to confirm that, I'm going to go to their quarterly cash flow report that they released back a few months ago in April. And just to confirm, yes, so no cash receipts. So this is the exploring company. What do they explore? Well, you could just have a look at the activity report, which was released on the 29th of April alongside the cash flow report. And this should tell you what the company does. And iron ore, there you go, iron ore project in South Australia. And that's probably all I'm going to talk about. And they might have an about section right near the end. I have no idea what stage of exploration they're at. So Magnetite Mines is an ASX-listed iron ore company focused on the development of magnetite iron ore resources. So there you go, magnetite iron ore. That's something I did not know existed. 100% owned mineral resource of 6 billion tons of iron ore is developing the Razorback Iron Ore Project, 240 kilometers from Adelaide. Now, that's all I know about this company from what I just learned there. The other things I know about this company is they are not generating any cash flow. I'm not even sure how long they have to go before they get into production. It could be many, many years away. It could be in a year's time. So you have to go through this on, look more in more depth. This company in more depth. $2.85 million of cash. They are burning through a little bit of cash, so they might have to do a capital raising eventually, that sort of thing. They also released this presentation. So maybe in this presentation, this was in March, they will mention like their timeline. That's one thing I'd want to see, their timeline. But again, I'm not that interested in exploring companies because markup's 27 million at a share price of 27 cents. Share price is now a little bit more than that. So they have a timeline here. Increasing global steel demand. I don't care about that. Any sort of timeline. Just talking about, what was this? I do like stuff like this. Razorback concentrates positioned in DR grade range. Okay. Above my pay grade. I don't see any timelines here at all. I just want to know what stage of the project they're at. So I'm not seeing any times here or projected times. Here we go. Okay, key milestones. 2023, we've already gone through that. 2024, final investment decision expected this year, looks like. Okay, so that's this year. All right, so apart from that, I'll just probably look at the chart. And the share price of this company has been in a long-term downtrend until recently. So there has been a bit of an increase in interest in this company just based off this chart. Now, the volume has sort of gone backwards since the share price started to break out just above 28 cents. So this could be a period where the share price just consolidates for a while, but I'd like to see a little bit more interest in this company at this point in time. Share price has been in downtrend for a while. So I don't think I do have this company in my iron ore watch list. There you go. But it's not in production just yet, and I'm shying away from non-producing mining companies. In fact, potentially, I'm shying away from all mining companies because of the relationship between mining companies and the underlying commodity. And probably the only reason I might even think about buying mining companies is when the underlying commodity is at a really low-term or long-term level. Say iron ore back in 2016. That's when I might have been way more interested in iron ore. Not when a commodity share price or commodity prices are in uptrend, even then may not be the time to think about buying into commodity companies because again, the mining company share price and valuation is beholden to the underlying commodity they are mining. So that's all I got. Thank you, Dickie Nee, on Magnetite Mines. Jeff Daly says SXG, which is Southern Cross Gold, I believe. SXG, Southern Cross Gold, is explorer only gold antimony, whatever, in Victoria. I would wait for the autumn phase of the Lassonde curve, then get in at this. I have seen this Lassonde curve a couple of times. It's sort of like the mining cycle. Here it is. The mining cycle from when you're going from exploring to production and sort of the hype cycles within that. So here it is. I'll try to expand that a little bit. So you go from exploration geologist first on the ground, recon drilling, exploration drilling, discovery, and then the orphan period. So he's saying, Jeff Daly's saying it's in the orphan phase right now. So we're seeing less interest in the company, although the chart looks different. And then the strategic investment, buying construction, revenue generation, and that is the peak of the cycle, and eventually mine closure. This is a sort of a general overview of the life cycle of mineral discovery. And so Jeff Daly is saying SXG is in that orphan phase. The chart looks pretty good though. Chart looks pretty stunning. Beautiful, beautiful breakout on the 5th of September 2023. So if I go back to that, share price went sideways for a long time. You had a lot of time to buy into this company at about 75 to even 80 cents. But the main thing is the share price didn't pull back. And that's the thing I'm looking for. That's the pattern. When a company share price increases like this, Southern Cross Gold, on the 5th of September last year, share price didn't pull back. Didn't pull back at all. It just went sideways, which is a good sign moving forward. And then you can see what happened to the share price. It moved into a beautiful uptrend. So I think what's happening now, what Jeff Daly's maybe hinting at, that eventually the share price of this company is going to start pulling back because into the orphan phase. So thank you very much, Ansel. Thank you very much, Jeff Daly. You didn't go into detail about the KRM chart. We'd like to know about your TAI on it. KRM, what is KRM? KRM. Kingrose Mining. Let's have a look at the Kingrose Mining chart. Okay. So this is an example just like Southern Cross. The share price of this company ran up on the 22nd of May. So was this the 22nd of May? Yes, was the 22nd of May. So I probably just mentioned this company in passing because the share price did rally 21.3%. But look at what the share price has done. It's pulled all the way back from about the 5.5 level, 5.5 cent level, all the way back down to 4.6 level. Now, maybe this is sort of the buy the dip situation. The share price will start to rally from here. I could definitely see that happening with Kingrose Mining. Not an absolute, but I can definitely see that happening with this company. I'll probably just stay on the sidelines for Kingrose Mining, but I could see that happening. So thank you, Brett. Hopefully I've answered some questions and we've had a little bit more time on Kingrose. So this is a sort of situation where I just like to wait and see what happens. And if you do see start to see higher volume coming in and the share price starting to rally, that could be a good sign moving forward for Kingrose. A couple of more questions, I think. Do you still own DGL? Yes, I do. And to be honest with you, I should be. So I sold out. So I probably did this video way back. I sold out and then I bought back in. Just have a look at the chart for DGL. So this is probably my biggest trading mistake. I'm going to say it is my biggest trading mistake. So we all learn from our mistakes. That's the main thing. So I bought way back DGL, way back here, back in 2021, sold out. This was a really good time. I sold out when the CEO and the founder made some stupid comments in regards to the CEO of another New Zealand company. And that was a good move because not only that was a stupid thing he said, I can't even remember what he said, but he did something stupid. The share price then moved into a well-defined downtrend. In fact, the time to sell would have been probably around about May 2022, and share price is moving down lower. And then I thought it was trying to break out back in February. It looked like it was trying to break out. Share price went sideways. I thought that's an okay. Share price could go sideways or could go higher after that little bit of a consolidation period. But then the company released their results in February. Share price fell to 60 cents. Now, the company actually released a really positive announcement on the 14th of March. And that's why we saw a little bit of rally then. But the market just doesn't care because there's so much negative sentiment in this company. So things are turning around. If we go back to that positive announcement, that was me. That gave me enough reason to maintain my holding in these shares because I do think there is an argument that this company is really undervalued right now. And we just see continued selling. So even today, indicator price is down 2 cents to 55 cents because of one person wanting to sell. That's all it takes to increase or maintain negative sentiment. One person willing to sell on market, and it just pushes the share price down. So this positive sentiment on the 14th of March, I think was good. So it was head office relocation, CFO resignation, but business update. And it was a business update that sounded okay. It sounded like this company is becoming undervalued. Is pleased to advise that the company is seeing a strong rebound in activity in the second half of financial year 24. And there's other chemical companies on the ASX and overseas that are seeing the share price actually move into uptrends. And it just shows you the power of negative sentiment. And that is definitely true for DGL. So this is definitely my worst trade, but I do think there's value in this company. And if they release a profit upgrade, that could be really the trigger for a shift in sentiment for this company. But the share price right now is just drifting lower because of negative sentiment. And that's all I'm going to have for today's video. because I wanted to keep it under 20 minutes. And the market has just opened. It is now 10 a.m. So I'm going to have a look to see to see if any other announcements have been released and to see how the market has opened on this morning. So the next answer reply video, I'll start with Chef's Circle. Any thoughts on corporate travel management? I do have a few thoughts around that covered. So last thing I should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.